Now on Sky News Business, your property empire.
Hello and welcome to Your Property Empire. I'm Chris Gray. On tonight's show, what are the top 10 questions that first homeowners investors have? Does property or shares give you the best performance? What is the best loan to take out? And is negative gearing still worth it? Well, joining us on the show tonight is Effie Zahos, editor of Money Magazine, and Charles Tarbey, chairman and owner of Century 21 Australasia. So welcome to you both, and welcome to the new studio. So, Effie, we were talking about exactly this in the Property Expo in Sydney a couple of weeks ago, and I think the first big question for everyone is, should we buy now or should we buy later?
Yeah, we did, Chris, and there was a great show out there, and there's a lot of first-home buyers in the audience, and it's a question I know you receive a lot, and it's something I have received for many, many years, and I know you've written plenty of pieces for us on Money Magazine about this, and I can understand the dilemma that first-home buyers are in, and I think you would agree here with this, is that is there ever a right time to buy property? And I know you've crunched some numbers, and I've done the same too, as, okay, so if it takes, an example I think you've actually used is $2,000 per month. Let's say you can save that. It takes, 1 year to get to $24,000. If the property market's going at 7%, and that's quite a strong, rise, then you're already out of the market. I mean, it's risen, a $500,000 property has risen up by $35,000, and you've only saved $24,000. So you're kind of constantly chasing your tail. And this is what a lot of people have experienced, especially in the hot markets. So it's a case of, well, should I jump in, pay LMI, and be done with it in a way to catch that wave?
Now, what about you, Charles? You love selling your good property, or your real estate agents do, but I know you coach your kids. I bet you'll be saying buy now rather than later.
Yeah, I think it's becoming a very good time because a lot more opportunity. You'll see the auction clearance rates have changed, but you also see a lot more properties coming on the market right now. So it's a very good time to start scouting, and you've got to make sure that they pick the right locations. There's some pretty good locations coming up, Chris.
Sounds good.
Yeah.
Now, Effie, where are the best places to save your deposit? And we've got a graphic that will come up as well.
Yeah, that graphic that should be on the screens there, that's actually from the ASX Russell Index long-term investing report. Now, those returns are actually gross returns for 10 years to December 26. Interesting there, no surprises, residential property is at number 1 at 8.1. But over a 10-year period and a 20-year period, this report shows that as far as picking the asset class, property versus shares, have fared pretty well. I guess what people need to consider, with interest rates being so low at the moment, then the risk, obviously, putting your money in an online saver, and that's where a lot of first home buyers do put their cash, in an online saver. It is like money going backwards, because once you take inflation and your marginal tax rate into consideration on the earnings, your money's going backwards. I understand that you have to kind of protect your capital, and rightly so, but I think it's a good opportunity to maybe speak to a financial advisor, just see, if I dial up the risk, can I get a better return? Yeah, sure, but you do have to dial up the risk. And this is the thing I always like to say, is that if you are saving for property, maybe a great way is to invest your savings in that same asset class. And the exciting thing right now is that there are plenty of investment vehicles that allow you to invest in property with small amounts of money. So that way, if the property market's going up, your deposit's going up. But I have to say, if the property market's going down, your deposit's going down too. So it's all relative. There's no magic to where to invest. You either got your cash, fixed interest, and then you may go into property or shares, direct or indirect. Lots of great exchange traded funds. Lots of new disruptors coming in. You've probably heard of BrickX or Acorns as well. Probably the best place to start is get onto the Money Smart website, the government's website, and it lists all those asset classes and what you can expect to get.
Now, Charles, you're obviously a property man in terms of investing yourself, but also you've got a business in real estate. Should you still diversify, though?
Yeah, I think that there's a change coming through, and I diversify a little bit, but property market, you look at that 8.1%, that's not going to be like that in a year or 2 or 3 years' time. The stock market's going to be claiming that price probably, or some other area. So it is a long-term proposition. I think that you probably could diversify a little bit right now, because the capital growth in property, as much as I'd like people to purchase property, the capital growth won't be there to the same extent. There is still some capital growth in certain areas, but some areas have reached the top and gone backwards.
Yeah.
Now, for some of the first home buyers out there, there's a lot of talk now about rent vesting, so the concept of renting your own home where you want to live and then investing the money somewhere else. Are you an advocate of that, or do you still think the great Australian dream's to buy your own home?
No, I think at the end of the day, you've just got to be able to buy or take what you can afford, and this is where the issue has been for quite some time. Most the young couples haven't been prepared to do that. They've really wanted to make sure that they buy the property that they want to live in and go straight in and do that. But there are areas, and we've talked about this a lot, about people should buy where they can afford and rent where they want to work or where they work, and I think that's probably the best option for most people.
Now, Effie, I know you'd have a lot of youngsters and a lot of older parents as well that are talking about this subject. What are your viewers saying, or your readers rather?
Yeah, we've touched on this quite a bit, rent vesting. It's interesting. I agree. You can try and live where you want to live, and probably you may not be able to afford to buy that property as is. So that's why the whole concept of rent vesting can work. The thing is, right now, yields aren't that high. So you've really got to factor that in if you are getting an investment property, and that's the way you want to jump into the property market, and then rent in a suburb that you want to live, wherever that be. St Kilda in Melbourne or Bondi because of the beach, whatever the case may be. So with yields so low, you may find that you probably may not be able to afford a property as big as you think. And also, we're looking at a situation now where lenders are really tight. It is not that easy to get an investment loan. And they do look at things like if you are relying on your rental to pay that mortgage, then in a lot of cases, depending on who that lender is, they may not take that whole 100% for serviceability. So it's quite tough. There are postcode restrictions, and also we've got APRA that's come in as well, limiting the amount of a lender's portfolio to their investment loans. So while it sounds so great, I think rent vesting has been around for a little while now, but if you're jumping in it now, it is actually probably the hardest time to actually get in there because of the lending landscape has changed so much, and it's tough to get an investment loan.
Sure. Charles, the next question we've got is around negative gearing. Is negative gearing that something that should still be around? Is that attracting a lot of people these days?
It's scaring a lot of people, the fact that it might disappear. There are different hybrid versions of capital gain tax or negative gearing, around the world. I think that if they change it now, it's going to be quite a disaster because it is a business. So it's no different than your business or my business, money in, money out. We have expenses to match, and I think if you're an investor, a professional investor, you've got expenses, and you've got to be able to use the benefit of those tax use benefit of tax, from that side of it. Otherwise, you're just really going to throw a lot of investors out. Chris, the problem we have is if the investors aren't in the marketplace, then the government has to get involved. And if the government has to get involved to provide housing, they've demonstrated over many, many years that they're not the best people to do it.
Yeah, I think there's a lot of people that agree with that. Now, Effie, we'll bring up the front cover of your magazine. I think you've got negative gearing on the front cover. What are your thoughts on it?
Yeah, we actually explore that. That's Bryce Holdaway was our guest writer on that one. And it was a question that I get asked all the time, so I wanted to do a cover story out of it. Is negative gearing still worth it? And I touched a little bit about all the changes from the lending side that's happening, which is making it tough. The government has tinkered with negative gearing slightly. The last budget, we actually saw that the depreciation perks have gone on assets like, your curtains, your soft furniture and so on. If you haven't bought the place brand new or bought those assets, and you can't claim them. And also the cost of, say, seeing your investment property interstate, you can't claim that anymore. So look, you never do get into an investment because of the tax benefits, clearly not. But it was interesting to see that negative gearing is just a strategy, and at the end of the day, it's all about finding a great property that can actually give you your capital return. And I think his summary in the end was that's what you're looking for. A property that can actually give you great capital return over the long run is going to be better than something that doesn't deliver there and maybe give you a nice cash flow in the short term.
Sure. Charles, final question for you before we go to your numbers. Where should people be buying these days?
No, I think
very simple question.
Yeah, look, there are a number of marketplaces right now. Regional is still good. Regional's still got some growth in most regional areas across the country. Perth is starting to become very attractive again. There are property prices selling there for below what they sold for pre-boom. The apartment scene in Brisbane, it's something I'll be watching very, very carefully because I think there might be some very good bargains coming up. Some people may not be able to complete, and I think we'll see some opportunities there as well.
Okay, well, let's jump into your numbers. What's happening with the clearance rates?
Yeah, very interesting. The stats are changing. They have been moving progressively down. We had a national clearance rate of 67.8%. So this time last year it was 74.4%. So there is a big difference on that. Sydney, average performance from Sydney, wow, 64.1%. But guess what? Melbourne sat at 71.7% after they had 1,983 properties go to auction. So it's really quite a significant number. Sydney had 1,196. The best performing behind them was Canberra at 77.1, and they had 128 properties.
Now, I think they had, I flicked on the TV last night and there was the block auctions. I'm not sure if you're up with that, but does that give us any indication of the market at all? Or is that all TV and you should ignore it?
I don't know how many properties get millions of dollars worth of advertising spent on them. There is a lot of staging that goes on around those events. We've conducted those before with another commercial channel.
We have in the good old days together.
That, won't you? And there was a lot of work going on behind the scenes.
Sure. So what are homes advertised for sale?
Good. Last few weeks has been very strong, starting to come up strongly. This week was 1.68%, last week was 2.13 up. So what we're saying to see that climb, and that's the climb we needed to see. So I'm very impressed with that figure, and that's the figure that when I looked at those auctions, I looked at Melbourne, 1,983 auctions. That's a pretty big number. This time last year they only had 660 auctions. It may have been around a long weekend or something, but I think that there's a big change coming through, and that's a great opportunity for everybody.
Okay, and what's happening with rents at the moment?
Not much at all, Chris. There haven't been any movement really of anything to talk about. We had some issues with Darwin and Hobart going backwards a little bit after climbing. So I think it's been steady. When you look at the amount of rent that's been collected on average across the country, it has not changed very much over the last 3 years from the stats that we've been keeping. So again, as the interest rates stay low, that's okay, but if they start to move up and then you've got more investors in the market, it's going to be a bit tougher for investors or landlords.
And then finally the vacancy rates.
Pretty good stats there, not for Perth. Perth came in at 8.65. It was in the high sevens for a while, early sevens. So I'm watching that one closely. The other, of course, is Sydney at 1.64, but the best performing, you get this one, Melbourne, 0.6% vacancy rate. So a 3.63% overall for those three capital cities.
Yep. Now, Effie, I might jump to you quickly before the break. We also touched on the Louis Christopher SQM results at the Property Expo, and there's a lot of states that were still expecting quite a bit of growth. Are people still talking about a bubble, or is that really saying, well, maybe there isn't a bubble everywhere?
Yeah, absolutely. Like any kind of asset class, you do have pockets, and property is no different. So we have seen headlines come out and say that, you know, market has fallen, and it's definitely become softer. But Chris, you're yourself in there every single day. Again, it depends on your suburb, the location, and some of them are seeing rises. So Louis probably got some of the best research out there, and I know his new reports come out, the boom and bust. It's always worth having a good look at that, and then just comparing it, I guess, with, you know, some other research houses. But it's doing your homework and not just looking at some headline rates that have come out and said, you know, the market has fallen. I think most experts are saying that, yes, of course, the market is softening. You know, Sydney is just, you know, I guess kind of having to relax a little bit while others play catch up. But each state is very different. Each suburb is very different. And it's a case of, you know, doing your homework properly to make sure you're buying the right one.
Wonderful. Well, thanks for that update. Now, we're going to take a short break, but we'll be back soon, so join us in a second.